Do you ever feel like you're not living up to your financial goals? Maybe you're stuck in a job you don't love, or you're barely making ends meet every month. Trust me, I know the feeling. Well, I've been there, but I refuse to let that be my reality forever. I took a chance on investing and it paid off big time. I mean, from exactly $109 to $15,752.48 in just 12 solid months. Now, I want to share my success with you. In this video, I'm going to reveal the top 10 discounted stocks that have the potential to 10 times your investment. But here's the thing, I'm not a financial expert. I'm just someone who took a chance and it paid off. So, if I can do it, so can you. If you're tired of living paycheck to paycheck and want to make a change, then stick around till the end of this video. I promise you won't regret it. Let's start the journey to financial freedom together. But wait, there's more. I'm not just here to tell you to invest blindly, because I will give valuable insights and analysis on which companies have the best chances of success. So I believe once I'm done with you, you'll be able to make informed decisions and invest in the companies that have the greatest potential to make you a profit. Before I dive right into this, help me grow this channel, actually motivate me by leaving a comment on what you think, but very importantly become my fan by subscribing. Alright, let's go. Have you heard of Rocket Lab? It goes without saying that I'll start the list with the sexiest. This is not by chance. I want a multiple expansion rather than an increase in sales or profits, which accounts for a large portion of my gains. An example of this recently is Tesla, TSLA. Amazing company, but the majority of the gains between 2019 and 2022 came from multiple expansions before its recent sell-off. As the company's founder and CEO, Peter Beck, has stated, Spacelab is much more than just the second best private launch provider. They are a full-service space company with interests in many areas, including satellite management and manufacturing. Will Rocket Lab overtake SpaceX's SPAC dominance in the upcoming 10 years? Nope. But they don't have to in order to score 10 times your sure profit. They only need to reach a valuation that is 1/5 of what SpaceX is currently given the valuation gap. Number 9. AST SpaceMobile. What is likely the second sexiest business on this list? I'm not going to stop using my cell phone today, neither are you, so this makes it a sure investment in AST SpaceMobile. Using the AST SpaceMobile (ASTS) technology, regular cell phones can communicate with a satellite located more than 720 kilometers, 447 miles away. It is based on elementary physics and has no effect on the phone's antenna size. A similar plan for cellular connectivity in remote areas using satellites, unveiled by Elon Musk and T-Mobile, may have been made possible by partnerships between some of their rivals and AST SpaceMobile. Partners include Vodafone, American Tower, and AT&T, VOD. Number 8 on our list is Planet Labs. Since you and I are aware that the industry is primed for high multiples, add one more space name. Both Maxar Technologies, MAXR, and Planet Labs, PL, have the capability to collect Earth observation data, but their prices and satellite sizes vary. In contrast to Planet Labs, which has approximately 200 satellites and is already the largest fleet in the industry, Maxar's buyout offer is a 129% premium. Maxar will most likely be worth $2033 at a 10 times market cap of $1.2 billion and an EV just under $1 billion. Let's move on to the next company where you can buy their stocks. Number 7 is JFrog. We all know that frogs make noise all the time, especially when they're mating. Just like its name, buying their stocks means you're going to make noise about the 10 times profit in the shortest time. Actually, a DevOps platform called JFrog for OG enables developers to update the software they create on a continuous basis. The key word here is continuous. It is referred to as DevOps SaaS and is prioritized for its security. However, many security flaws are caused by software flaws that hackers use as a backdoor to gain access rather than credentials that have been stolen. JFrog is expanding like a weed and is anticipated to grow significantly over the next 10 years despite having a market cap of only $2 billion at a lower EV. Number 6. HashiCorp. This was expected. It may seem improbable to predict gains of 1,000% given the company's $5 billion market cap, P/S of about 10, and the fact that they are currently in the red. The market leader in software for automating multi-cloud infrastructure is a freemium company called HashiCorp, HCP. They enable companies to use several cloud service providers at once. It's no longer the norm to only use one provider, such as Google Cloud, Microsoft Azure, or Amazon Web Services, AWS. This is made possible by HashiCorp, which enables organizations and governments to switch service providers in order to get better performance and pricing. In 2033, with future dilution taken into account, this could indicate a market cap of more than $80 billion. Number 5. Sumo Logic. I wanted to include a related name because data collection and analytics will be a major theme over the upcoming 10 years. It's challenging to identify potential 10 times profit among them though. I'm saying that because they've done the magic for years. While Snowflake, SNO, is interesting in the low $100s, Datadog, DDOG, is overpriced and overhyped. Despite being small, Sumo Logic, Sumo, has been discovered to have a $1 billion market cap and an EV that is even lower than its more seasoned competitors. Many large businesses prefer it to the competition because it is cloud-native SaaS, including Fidelity, Ulta Beauty, ULTA, Mattel, MAT, Okta, OKTA, and AB InBev, BUD. They have experienced strong growth despite the volatility. Number 4. iPath. This is probably shocking, but this will get you back your money and more. I mean more. Yes, the fact that this name is Cathie Wood is both a blessing and a curse. If you're getting in now, it might be a good thing because iPath has been in all 6 of her funds. The final kick in the groin for tax loss harvesting caused a sell-off for iPath, a pioneer in robotic process automation, RPA, in 2022. The business was founded by Romanian programmer Daniel Dines and Marius Turcă. He currently serves as co-CEO with Rob Enslin. Dines is a business-savvy entrepreneur with a big-picture outlook who wants to increase stock value by 10 times by the year 2033 to reach $100 billion. Beam Therapeutics takes number 3 on our spot. The most uncertain industries are early-stage biotech and pharmaceutical. As long as you can persuade customers to buy them, you can sell subpar or even useless goods and services in almost all other industries. Not so in healthcare. To sell anything, you must have FDA approval. Furthermore, that product is supported by objectively collected data, not just numbers. Already, the most popular publicly traded company that employs base editing methods for gene editing is Beam Therapeutics, BAM. These procedures involve double-strand breaks, HSBs, which can result in harmful DNA damage and raise the risk of developing cancer. It is challenging to get clinical trials to approved TRISPRTAs 9 gene editing methods because there aren't many of them that don't involve DSBs. However, only a third of the 75,000 known misspellings causing genetic disease could be corrected with base editing, despite the fact that they have the potential to correct errors in the 4 most prevalent bases in DNA. Number 2. Primary care takes the spot. Larger sequences are subject to search and replace in prime editing. We can finally be free from being bound by the overwhelming majority of misspellings in our DNA if we combine our base editor with our prime editor. David Liu, a scientific co-founder of numerous companies including Editors, EDIT, Beam, and Prime Medicine, PRNE, said that and much more. With a $1.5 billion market cap at an earlier stage than the first 3 CRISPR names to go public, Prime Medicine's IPO was a success. The IPO, which MIT announced last year, may lead to upcoming entries that are more lucrative. If Prime Medicine keeps its independence, a market cap exit of $40 billion or more might be required for it to become a 10-bagger stock in 10 years. They are entitled to the first-generation CRISPR technology, unlike CRISPR Therapeutics, according to a court ruling, but a name like Editors might make more sense than Prime Medicine. Finally, the number 1 spot goes to AbCellera Biotherapeutics. The Canadian business AbCellera Biologics, ABCL, has a full-stack AI-powered antibody discovery platform. They assist pharma in locating antibodies for particular purposes. The only candidates they have so far successfully brought to market are COVID-19 antibodies for Eli Lilly, which serve as the best example, LOI. AbCellera has been approved by the FDA for use in emergencies, and the business was founded in 2012. Bebtelovimab generated hundreds of millions of dollars in royalties before having its EUA revoked. Bamlanivimab had already had its EUA removed. The unusual circumstances under which it was requested and approved, the unusually high royalties on covered antibodies, ranging from 13 to 15%, and the lower royalties for all other industries were all factors. The process of creating new medications has cost more and taken longer than expected. This results in greater dilution for the shareholder. There is a graveyard of dozens of baggers that go to zero for each 10 or more baggers in this area. Even for those who do well, years of dilution frequently prevent the original investors from realizing disproportionate gains. Make wise guesses. Don't just get off yet. It's now time to make up your mind on the stocks to buy, and these are very cheap with great profits. Don't be left out. Thanks for watching. Hey, why don't you smash the like button on your way out? Don't forget to subscribe, leaving the notification on. Your comments will be much appreciated.